Hi, this is Victor from Trend Following Trading for Beginners podcast. Today I want to talk about General Electric accounting debacle and how using a very simple trend following system will help investors to benefit from the downturn before any of the news hit the wire. Basically, over just the past weekend, there's loads of news from CNBC and the likes of America about General Electric. Basically, somebody, a whistleblower who found out the problems in Iran and Madoff Ponzi scheme have now written a report, 100, 200 pages report about the accounting issue within General Electric, and the share basically plummeted 10%, 15% or something on the day. And the news basically, basically all talking about it. But I was quite surprised that this actually happens again, that the financial news are actually making news out of it. I mean, roll back to not so long ago, we got Madoff, who is basically earning 1% a year and running a Ponzi scheme for years for one of the most wealthiest or so-called very knowledgeable people in the world, pension funds and all, and got exposed by this whistleblower, and then basically lost the money, and of course Madoff is in jail now. But they're not. You went back to like Enron, 2000, 2001. I mean, I read books about it. I had podcasts about it, and I read news about it. That Enron basically created a lot of accounting problems and hide them in offshore company somewhere, and then created its own trading floor to show regulator and auditors and news reporters how they work and how wonderful they are. Basically just employ actors. I mean, when it comes to money, greed drives everything, and I'm not surprised these things happened. But then what I'm surprised in years later, we still have a similar issue, and people still just find it very amazing, how to say on the report on news. But company being company, they follow whatever country's accounting rules are, and basically they find ways to massage the figures and to move the problem, the money issues to a different account or of account balance sheets, moving them around and so forth, and it's nothing new. It has always been that way before, and for some reason people find it surprising. I personally don't. In Hong Kong, I mean, I'm from Hong Kong, we have Mr. Lee Kai-shing, we call it Superman, and his company, the property companies and media has always been very good result and very surprising. And a lot of people already in Hong Kong talk about it, how they manipulate their own share price by moving around their account in different way within the legal, what the accounting rules allow, and then massage and make it very nice results. So I'm used to that kind of thinking, and one cannot help to think of all those people who have lost loads of money, and Enron and Madoff, and still haven't learned about it. People still thinking, how people still try to invest in company like this. I mean, if, like what I said today in the introduction, if you have a very simple trend following system, you will have found out this company share price gone down so much. You should have minimum, if you're not used to short selling, at least get out the shares. Now I was just looking into the shares, and over the weekend, and basically I was quite surprised to see the actual General Electric price have gone up to $40 before, back in 2007, and then go back down to like $5 or $6 down to 2009, and then come back up again to about $30. And since 2017, the price has been more or less down, and only recently gone back up to 200-day moving average. Now, if you use a very simple trend following system like a 200 days moving average, basically for new people who don't know about moving averages, is basically 200 days is using the past 200 close of day price, add them together and divide by 200, and then basically just create a trend, an average, moving average line. And you can plot in any charting software. It's very simple. It's moving average. I just use a simple moving average and just plot it in the GE curve. And I was just looking over the weekend, and I can clearly see around February, March time in 2017, the price already gone below the 200-day moving average. And if you have used this, and you have basically either stand aside, sell the share if you have General Electric at the time at around $29, $28, and then just stay out of it until recently, and so forth. And it's like for what 2 years, 2.5 years, that kind of stuff, and you can benefit by shorting as well if you are into shorting shares. You make lots of money. And this is what I try to say is that this simple trading system can help you to benefit for all this downturn way before CNBC or any financial news talk about, or any whistleblower suddenly say something, because somehow somebody in the market knows about the accounting problems and has been shorting the firm. General Electric apparently is not new having accounting scandal. And if people have been investing in General Electric because it's a big company and because it's well established, whatever, and don't look at the share price and still put in the pension funds and invest in them and then get out, then I thought people in general have to take some responsibility by themselves instead of just relying on pension funds, whatever. They should look at the curve, look at the graph, learn something about share trading, and look at the graph simply by looking at it and say, okay, it's below 20 moving average, I get out. I mean, some people are actually teaching this. It's very simple and making money out of it. And it's very simply everyone who has a pension and also bought into G or any other shares in pension should actually learn, in my point of view, in my humble opinion, to learn about curve, about charting. This simple 200 moving average, for example, as a system that can tell them when to get in and get out of a share. I used to do that with ISA in UK. Basically, is an individual saving account that allow you to buy shares as well as put the money aside to the bank for anyway 3% back in the old days. And I've been using this very successfully to buy and sell shares. The only problem is at the time I don't know what it inferred, using ETF, kind of exchanges traded fund, to try to benefit from downturn of market. When the 200 moving average said get out, I got out. I don't know how to short at the time years ago, and I basically saved myself from all the headaches from year 2000, 2007 as well. So I just thought it's worthwhile to learn from this experience as a trader or any investor in the stock market. Look at a share. If you know how to use a very simple 200 days moving average, can help you to at least minimize your losses. You can bare minimum stand aside if the price drop below 200 days moving average for more than a couple of days, and don't get buying until the price is above that. Very simple system, but a lot of people just want quick bucks, quick money, and don't want to learn about it. And I just feel sad that many people lost money, and then the news and say, oh, all this accounting stuff, blah blah blah, and it's like, yeah, accounting's people do muck around with the books, accounting books, irrespective of whatever people say. So long as within reason, within a legal framework, they're allowed to do so. They move things around. At the end of the day, this is why I don't do fundamental analysis, because if you cannot believe and trust the books that's been published legally in the public domain by different public companies, what can you actually trust other than the closing price each day? And the closing price each day actually, in this example, General Electric is telling you there's something wrong, and people still go into it, still buying it. I just feel, it's just that we should just send this message out to say, all people who have a pension plan should learn a bit about trading and save themselves a lot of money instead of wasting them and following some pension fund gurus or the financial industry tell them, oh, stay in the market. No, you don't stay in the market. Imagine you are about to retire, and your price from 2017 for General Electric, which is, let's say you got a lot of it in your pension plan, from $29 down to like $8, $9 in the space of 2 years while you're retiring. It's really scary. That means you lose, I don't know, quite a lot of money, perhaps. And then you end up, you have to come out and work again instead of enjoy a good retirement. And this have happened time and time again. 2000, 2007, now the latest bull market has been up for 12 years. I mean, very soon, I'm sure the market cycle will come back, and then sooner or later we have a big drawdown, big downturn in all indices, and a lot of shares lost the shirts and lose a lot of money. And people are asking about why again. I mean, the industry may be corrupt, but I also think that it's also our personal responsibility to take charge of our own money, because in my humble opinion, nobody cares about your money more than you do. The financial industry is well documented. A study about it is there to take fees. All the trade, all your share, your pension increase is after fees. And the financial industry, how big it is, how big it is now, take a lot of money out of everybody's pensions. And the question is, what are you going to do about it? So from this debacle from General Electric, I basically just want to say, well, it's about time people wake up and say, look, smell the bacon, smell the coffee, or whatever you call it in your part of the country, in the part of the world, to wake up, learn about trading, learn about how to manage your money. Share trading may be one way, or just at least get an understanding how your money works and get some education on it. I mean, it could be for mentor, people like myself, or other people in properties or business. You actually take charge of your own life rather than just work for somebody, listen to the financial industry, go to school, and then work 9 to 5 and work 60 or 40 years, whatever, and then try to get a gold watch. And then at the end of the retirement, your account, your pension fund go down to zero or something, like in case of Enron. And everybody just say the government's fault. No. Government may be at fault, the financial industry may be at fault, the regulator may be at fault, but you also at fault by falling asleep at the wheel, because your money, nobody cares more than you. So I just use this as an example, so people should take charge of their own financial future. And using a trend following system, a very simple 200 days moving average system, you have benefit tremendously. So this is just today my comment and my rant, and I thought it's a good thing to talk about, to get people to learn, to take control of the situation, and tell you things that could happen. This will happen again and again. I'm sure. 10 years later on, we probably find some other company doing that, and it's always going to happen, either you like it or not. So I hope today's episode is not too much to swallow, but if you like this kind of things and want to continue to listen to this type of podcast, then please subscribe to my podcast and subscribe for it, and I will speak to you soon, and have a good day. Bye.